Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, I'm going to go over something a little bit different. I'm going to talk about how you can use multiple time frames in order to look for trades and opportunities and why it's a good idea to do this. And essentially in the markets, when we're looking at the impulses and retracements on trends, you'll have impulses on higher time frames and trends within that on lower time frames. So let's say this was the daily that we have here on pound US dollar on the left hand side just here, and we've drawn this little line out where the market is making higher highs and higher lows. Within that you'd have trends. So if I was to change the color to blue, and what we'd see on the 4-hour time frame is a slight trend within that, okay? And then typically when we get a retracement phase, we'd see a small downtrend, potentially just one lower low or two lower lows coming out of that. Then we'd see the transition period here where the market then changes trend back into the uptrend and things like that. We then have opportunities on the 4-hour time frame at these areas of support and resistance where we can then go to a lower time frame and look for trends within that. Okay, so you'll see within these impulse moves there'll be trends like so. And that's all we're looking to do on a day-to-day basis. Now, what I quite like here on pound at the moment is that we have been in that transition period of being in an impulse move. And if I just draw a line from the low to the current high here, and we just look from the 13th of November, we can see that the market has been in an uptrend on the 4-hour time frame. So if I actually just zoom out a little bit, and if I put a marker on the 13th, which is just here, we can see the nice little trend that's formed in the 4-hour market. Okay, so we can see the market's making higher highs. Okay, and that's the transition period here for the market to then start impulsing on the daily time frame. Okay, so as soon as I see that, what we're doing is we're matching the time frames up. Then we can see that the daily is impulsing to the upside, the 4-hour is now trending to the upside. So the next thing for us to do is to highlight the area of support and resistance where the market is likely to continue to trend from. Okay, now what I like to look at is previous structure highs and lows. So if I look at this here on pound US dollar now on the 4-hour time frame, I can just grab a rectangle tool and say to myself, if price comes back into this level on a pullback, I can look for long opportunities in there. We can see that on the 19th, price pulls back into that 4-hour high and the market rallies back to the upside. Now if I go look at the 15-minute time frame on the 19th of November, what do we see forming? Okay, so if I actually just zoom a little bit out there, okay, the market will come back into that support. So if I grab a rectangle tool and just draw this in here on the 15-minute time frame, that is where our 4-hour support is. Okay, and what we see is the market goes into an oversold condition. Okay, and what we do again is just match the time frame up. So we have the 4-hour in trend, we have the daily impulse moving to the upside. Now we need to see the 15-minute trend agree with that, and we actually get a really nice breakout pattern in here where the market pulls back into the level, we consolidate, and what's really nice about this is we go into an oversold condition. The market then breaks out to the upside. Now this is suggesting to us that we could see some further upside at that point. So the way I'd look at this is one or two ways. I'd either wait for a pullback into the highs again and look for the long opportunity, making sure my stops are at least 10 pips below that low, or look for the market to buy in from there. So what we could do at that point, so you can see that that's 132.03, 132.93, just about 131.93 would be your stop loss, just about stays in that move there. And I would look to enter on the bullish candlestick in here after the market went into an oversold condition. Stop loss 131.91 or 93, I should say. and then I'll target the next area of structure. So if I was looking at this, we could look at the potential for the market to come back up into 133.11, which would be all the way up here. Okay, or we could look to shoot for daily targets, which would be around about, so the 19th is here, so we're looking at around about 134 as the target for this particular move on pound, and the market obviously rallies up quite nicely. So depending on how you want to view the markets, you can really use multiple time frames to enable you to pinpoint key areas where you expect the market to turn from, and then look for further long opportunities. So again, you can see here price comes back down into that 4-hour trend, into those 4-hour highs. Daily is still impulsing to the upside. If we go take a look at the 15-minute time frames around those points, you can see obviously that's the big spike into that level. The next day we get another spike into the level, the market changes cycle here. So you could be long in and around this point with stops below the lows, and in profit at the moment with the market moving to the upside. So what I like to do is analyze the daily chart, look at the daily closes, analyze the daily trend, identify the 4-hour trend, stay on the side of that 4-hour trend until it changes, then look for 15-minute opportunities on pullbacks. Okay, so that's a really good way to identify trend trading opportunities using your multiple time frame analysis.